Hey, what's up guys, this is Qui-Gon Jinn, welcome back to the channel. Just wanted to give you a quick update on the Bitcoin price action. This is going to be an attempt at making a shorter video. Another attempt, I guess. However, I am a bit pressed for time and I don't have too many things to comment on. But anyway, just wanted to keep you up to date with the price action that's happening right now. Bitcoin has come back to test that 55k level. Now it looks like we did find resistance at that 57.5 area. Like I was pointing out, this area of resistance here that we initially bounced from. There's also a bit of price action further back. If you actually go further back and you look at these wicks right here from April, late April, early May, and then you also have this consolidation zone. But in any case, there is some resistance here. If we look at the daily candle, you do have a sharp wick coming off of that. So far, there's 4 hours left. Hopefully, it can buy back up and close above 55k. But for right now, it looks as though you came up, tested that 57.5 area. So far, found some decent resistance there, got rejected. We've come back down to that 55k area, and it looks as though the price is threatening to, it looks, you dropped through it here on the 15-minute, came back up, retested it. We're unable to close any 15-minute candle bodies back above it as of yet. So it is threatening to lose this 55k area. Now, if it does lose this 55k area, we could probably expect, some further downside price targets, just trying to capture like what's happening in the immediate short-term price action. So Lennon did post this earlier, saying, pointing out this rising wedge again into that resistance that we spoke about. He said BTC 15-minute rising wedge into 58k resistance, showing bearish divergence with higher lows on price and lower highs on MACD, is something to watch today for anyone looking to take a short position. So he actually spotted this bearish divergence in the MACD, where there was lower highs in the MACD and higher highs in price. So that's interesting, and it looks as though that's starting to play out now, as we can see in the price chart. So the way that I had it drawn was more so like this, to try to get the contact points in there, because I like to, when I'm looking for a pattern, a chart pattern, I like it to have as many points of contacts as possible in order to, get a gauge of whether or not it is actually forming that pattern. So if I do a measured move from the breakdown point from here, it looks like you get somewhere around that 53,800 level. So I'm just going to draw a fib, a short-term fib level from here to here at the top. And if you see, that would be basically coming down, that sort of price target, that sort of measure move for this kind of wedge breakdown would come to around 53, that 0.5 area, 53,300, maybe a little higher, 53.7, if you get that sort of measure move. But in any case, staying above this level, this 0.5, this sort of short-term immediate 0.5 level, which I should mention that the lower the time frames, the shorter the area, or the smaller the area that you draw a fib from, it tends to not be respected as well as the higher time frames. But if you were to make that 0.5 retracement, you would be staying above this level here from when we got that first immediate bounce before making the double bottom. So staying above this 0.5 level would be a good sign. Now, if you do want to draw it like the way that Lennon had it drawn, you could take it out here, and you could I guess sort of see this bit of a deviation as something that, if you're willing to accept that as just a bit of a deviation, you don't quite have the contact points here, but you do have them here. And then still on the top side, you do have a decent amount of touch points. Maybe if you want to bring it in even a little bit more rising wedge pattern does look like it is more or less playing out. So we're going to have to bring, in order to find a good measured move price target for that, you would have to bring it out here. So also, if you draw it like this, you can kind of see where when it broke down, it did come back up for a bearish retest and rejected off of the bottom of it, you know, along with that resistance level that you had only wicked through. So when we were talking about potentially meeting resistance at this 57.5 area, you can see that where this line actually sits, you didn't get any candle body closes above it, not even on the 15-minute. You didn't get any full candle body closes above it. You wicked through it, but ultimately ended up rejecting from it. Now you have a lower high here, rejecting off the bottom side if you choose to have the wedge drawn that way. Now if we take this to the breakdown point, you can see it actually gives you a much lower target around the $50,700 range. So if we actually play out to that price target completely, that would be, you know, that would be more of a troublesome sign to me. It's already pretty troublesome that you're starting to lose this 55K support and you're having trouble closing above it. You can see these 15-minute candle bodies are having some trouble closing above this line at exactly 55,000. So I guess we'll kind of have to wait and see. As of right now, it seems to be struggling to hold 55K, which isn't really that great of a sign. So I'd say your immediate price targets, I mean, you are around the 382, and you had some a bit of a bounce here beforehand. So there is that that you could consider. What I think sort of is more likely, if we break down from this level, you at least see the 53,300 level. That would be the immediate 0.5 from this move. You know, the next level down, if you were to lose this 53,200 level, where it was resistance and support before, if you were to lose that level, your saving grace would be the 52,250 level. So 52,250 around there would be an immediate 618. If we play the measure move out to this longer target here, then you're actually making a 786 down at 50,700, which would still be here around this 382 retracement level, which I'll zoom out to that in a minute. It's actually a fib that's drawn from the bear market low to the all-time high. But if we are to lose this level, if we break down and we keep dropping from here and reject and we lose these levels of support, I'd say the worst case scenario would probably be ending up somewhere down here. We get another big shakeout down to this level before we can bounce, and if that occurs, this right here, this price action here, would be what's considered a dead cat bounce, and this could potentially be a dead cat bounce. So if you're looking for a bounce right away, sort of like what I was looking for, I hadn't expected the price to come down any further than it already has been, but if that is to be true, then you do want to see a bounce somewhere between, you know, 52,200 and 53,300 in order to make a case for that. Otherwise, you know, you have this 1.618 down here at 43,400, and that is also just below this 0.5 fib. So if I'm to zoom out real quick, just zoom out real quick to the weekly time frame, because it'll just be easier to see how all of this price action was captured. Drawing a fib from the bottom, the bear market low, all the way up to the all-time high, you'd be coming right down to that 0.5 fib level. Now it is, if you go down that low to 45.6, that would be, in a sense, potentially threatening bull market structure. If we close, like I said, if we close a weekly below this descending channel line, that's going to be not a good sign. However, you do have this whole structure, and this is the yearly support structure. The highest candle body close in 2021 was around this level. You also have this significant pivot point here. You also have, from the ETF release sell-off, you have that significant level there. So there is some structure there. As long as this structure is not lost completely, I wouldn't be too concerned, but if it is, that's when we have to then start to question the overall health of the bull market going forward, and we do start to break down, out of this this channel here. It sort of invalidates the whole bull flag, this whole bull flag sort of scenario here, where we would be looking for a breakout to higher levels. So that would not be a good sign. That would be a bearish sign, and we are probably likely going to be coming down to some lower levels at that point. So having said all that, those are your downside targets. If this is to be a dead cat bounce, you want to see these levels here hold. If we're looking for a continuation up. If not, I see this being the worst case scenario, the 43.4 level. So if you were to take this bounce, and if you were able to get out in some profits, or sell here on a long position, or just a little scalp trade, you might possibly be able to re-enter here with a stop loss below this level, because if we do lose this channel again, guys, and we start closing 1 hour, 4 hour bodies below this channel, that's really not going to be a good sign, as far as looking for a healthy uptrend to continue. And I will continue to cover it as the price action emerges further, but for now, those are sort of the targets you're looking at. And I would say it would be a good sign. We have these 1 hour bodies closing below the 55k level already. This one opened about a little less than 20 minutes ago. Maybe it can buy back above there, but you also have 4 hour candle bodies. This is the first 4 hour candle body closing below it. So in essence, you have more or less lost that support so far. If you continue to reject from it, you want to look out for these levels for a bounce. If it does fail to bounce there, then it's most likely to go lower. On the upside, so just keep that in mind. And we are also, bear in mind, we haven't broken this sort of downtrending resistance yet. It's a really sharp trend line, and now that we've gotten that bounce up, some more contact points are starting to emerge on this thing. So we really haven't broken the downtrend. We failed to get back above these 0.5 zones. If I just draw a fib now from here to the bottom here, if we are to bounce from these levels and hold strong, that would be a good sign, because you would still be, you're still inside of this descending channel here at that point. So you see you have wick here, wick here, wick here, wick here. No candle bodies have closed below this line, ever since March. So no candle body closes below this line. You get a candle body close below this line, then we're on the daily, then we're looking at some further trouble. But hopefully, since I've shifted my sentiment to a more bullish sentiment, hopefully that's not the case. So back to this fib that I drew from this top to this bottom here. You're looking for that to get back above this 0.5 fib retracement here at 59,500. Really, this whole zone here, we definitely, if we're going to see a bounce, even at some lower levels, and I mentioned, it could take a little bit more consolidation before we get up there, but you ultimately want to flip this 57 area, turn that into support, and then break back past this 59.5 area if we want to continue to head up. So like I said, it might take a little more consolidation. The price might swim between 53k and this 57.5 area for a while. It could swim in there for some time, and just reconsolidate. And honestly, it wouldn't be the worst thing to just consolidate, see some cool down, and see some reaccumulation take place. And especially if you get some sort of short-term higher lows coming in. This daily candle body, it would be great if it could close above 55k. You can see you're kind of flirting with that level. As we speak, you're flirting with that level. The daily is trying to build back above it. You do have a little bit less than 4 hours left before this daily candle body closes. So yeah, definitely watch out for those levels. If I go back to just the lower time frames one more time, oh yep, see, it looks like the 15-minute is struggling a bit, but it's trying to close above that. You have this level here, this 382 level, which you did after the drop. You broke back past, fell below it, came back above, flipped it as support. So it would be a good sign to stay above this line, this 382 level. It looks like you more or less rejected from that, but ultimately you do want to get back above this 59,500 level. And you can see actually this green line here, if I delete, it falls in line with that 0.5 fib pretty well. What this green line is, that's actually an anchored VWAP from the bottom of the bear market. So which still shows up on my chart on the short-term time frames. It's much closer to the price than it is on the long-term time frames, and I'll continue to mention that as we go. So yeah, in a nutshell, that's it. You know, a better situation would be for us to actually hold this level, and these dips below it was just a little bit of a deviation, like kind of how you got back here. But hopefully we can flip this structure here and right here into support. Hopefully we close a few candle bodies above it up here, and then charge towards this 60K level. You know, if we break out, if we break sort of this downtrending level of resistance, maybe we can charge towards 60K, and then flip this. We might have some trouble with this 61,350 area, but consolidation in or above this zone is going to be a good sign. So hopefully we can look to see if we get that breakout. Hopefully we can hold this 55K area. If you're a bull, anyway. If you're a bear and you're shorting, I would be careful. I already mentioned sort of the downside price targets. This 46.2, I don't really expect it to go much lower than that. If it does go lower than that, then we're sort of starting to flirt with the idea of the overall health of the bull market being threatened. So anyway, there's the update there. Keep an eye on that 55K level, see how it reacts, and see if we can hold it. Anyway, that's what I got. So I will try to keep you up to date, and I will see you in the next video. Thanks for watching. Bye.